Hello and welcome to episode 2 of Hot Market Cold Brew, the overly caffeinated real estate podcast that's always on the grind. I'm your host, Dominic Janitis, and trust me, I am just as surprised as you are that we have made it this far. Not because we don't have great content coming your way, but because I thought I was going to die in post-production trying to teach myself iMovie. So if you made it through the first 54 minutes of episode 1, I congratulate you. If you made it through and thought a toddler edited this, you're absolutely right. A toddler did. That's me. This is a learning curve for me, so bear with me. For any millennials out there listening and watching, if you remember when we first discovered clip art in PowerPoint and the obnoxious transition slides, that's the world I'm living in right now. So again, if you made it through episode 1 and clicked play on episode 2, thank you so much. You are my people. And I'm so happy that you are here with me today. So I have a great show for you today. My guest is a standout in the mortgage community. I've known him for several years now. He has helped me and my clients navigate through mortgage situations and certainly has provided a great deal of insight along the way. So we are so excited to have him here. But before we meet Jordan, let's dig into some pretty exciting news that's come up since the last time we've been together. And, obviously it wouldn't be Hot Market Cold Brew if we didn't highlight a few things that made Pittsburgh such a hot market. All right, everyone, welcome to Hot Market Cold Brew's Quick Sip, your quick real estate check-in. Let's check out what's brewing in Pittsburgh. According to a Realtor.com article that came out in December of 2025, Pittsburgh is still the most affordable city among the top 50 largest housing markets in the country. It's absolutely incredible. With a median list price of $245,000, according to their November 2025 Housing Market Trends report, they, Realtor.com, are showcasing that your annual minimum income needed to purchase a home in Pittsburgh is $65,000. This number is staggering when you see just how much you need to make something like this work in other major metros. So this means, quote, a household earning $65,000 could comfortably cover a $1,600 monthly housing payment, which includes a mortgage assumption of about 6.19% interest rate, as well as the property taxes and insurance. Realtor.com also says that in comparison, to afford a home priced at the November national median list price of $415,000, a buyer would need to earn more than $110,000 annually, which is about 70% more than in Pittsburgh. So yeah, Pittsburgh's market, affordable, active, and full of hot potential, whether you're looking for your own home or even an investment property. This also comes straight off the heels of another Realtor.com article that listed Pittsburgh as number 9 out of the top 10 metros for first-time home buyers. So for 2026. So this is a really, really exciting time to be a buyer in Pittsburgh and, quite honestly, a seller. Another really great article that was released since the last time we were together was from the National Association of Realtors, where they surveyed the entire country to find where mortgage payments were cheaper than rents across the United States. Turns out, surprise, surprise, Pittsburgh is on that list. For a 3-bedroom, your monthly mortgage payment, about $1,300. Your market rent for that same property, about $1,600. So there is a delta of about $300, $350. So it is definitely cheaper to have a mortgage payment in Pittsburgh than it is to rent. Taking a look now at commercial real estate, the Pittsburgh Business Times reported on the ULI, or the Urban Land Institute's Emerging Trends Report, naming Pittsburgh one of the 10 markets to watch in 2026. Pittsburgh actually climbed 16 spots in the ULI's 2026 report alone. The city's technology, education, and medical ecosystems anchors its real estate growth. And Pittsburgh's affordability attracts businesses and younger, more diverse populations. So this is absolutely huge for Pittsburgh because, as we know, a huge driver of the residential real estate market is the commercial real estate industry. So what's really kind of cool is if you back out of the micro portion of this and you go kind of macro on a statewide level, Pennsylvania actually was named the 10th best state to live in, according to Wallet Hub, back in Q4 of 2025. So you're seeing where things are kind of trending. And this was actually reported on by the Pennsylvania Association of Realtors as well. So really interesting information to see what happened in 25 and what we're doing with trends here in 2026 for Pittsburgh. So really just a great time to be in real estate in Pittsburgh. And that, my friends, is your very first quick sip of 2026. Now let's get back to this episode of Hot Market Cold Brew. And as always, keep checking back for more hot real estate news pouring really soon. All right, so obviously there is a ton of exciting stuff happening here in Pittsburgh, and wanted to share it with you and get you up to speed on everything that's gone on since the last time we've been together. But now, without further ado, I would like to introduce my esteemed guest, Jordan Beck. He is the branch manager and loan officer at Northern Mortgage. Jordan, welcome to Hot Market Cold Brew.
Thanks for having me. I'm excited to be here.
Happy New Year.
Happy New Year.
You know, this is the second episode, and it is our first episode in 2026. So
All right, let's do
excited
it.
to have you here. Before we pour in, I always ask, and by always, I mean I've only had one episode before, but what are you drinking? How do you take your coffee?
Black.
All right. I love it.
Caffeine is all I need. Doesn't need to taste good.
All right. Perfect. Awesome. So with the premise of hot market, cold brew, what does a hot market mean to you?
To me, a hot market means activity, conversations, most importantly, excitement. For me, usually that's, working with buyers to buy homes, and typically this time of year, gearing up to the spring market.
Awesome. Couldn't agree more. All right, so very fundamentally, baseline question, and sometimes I run into people who don't really know the answer to this, but I thought for those listening, maybe some of you might not know, but the difference between a lender and a broker, and which one are you?
Absolutely, yeah. So I am a lender.
Okay.
I have been a broker, so I do know both sides of the coin. Fundamentally, a broker is a loan officer that is the middleman between the consumer who is buying the home and the lender who is lending the money on that mortgage. A lender is basically cutting the middleman out. The buyer, the borrower, is getting the money directly from the source that they're talking to. The loan officer works for that lender. They're getting the money from that lender.
Okay. So then I guess the follow-up question I would have is when someone is working with a broker, that broker is shopping out for that consumer as opposed to a direct lender?
Correct.
Okay.
Yes, there's a caveat to that. So brokers, yes, it's options, different lenders that they can send the loan to. Lenders, they also have that option as well.
Okay.
They are, instead of sending to another lender, they have investors. So they can also do the same thing as brokers. The only difference there would be the broker packages the loan, sends it to the lender. It's funded and underwritten there, and then it kind of comes back, where the lender, they are doing everything in-house with disclosures, underwriting, funding, etc.
So typically that would mean from a direct lending standpoint, perhaps costs may be less to the consumer?
It could be. It depends on the situation.
Okay.
It really is specific to the client, what they're looking to accomplish. If it's a first-time home buyer, different conventional programs, FHA, bond programs, down payment assistance, or like seasoned investors with non-QM products. It really depends on the situation.
Okay. That's a lot. Real estate, we always say it depends. Same thing with the law. I'm sure if one of our attorneys out there listening, they always say it depends.
Lawyers, CPAs, and realtors and
That's
lenders.
it, right? So you've heard about everything that's going on in Pittsburgh. I just rattled off a bunch of amazing statistics and great facts about Pittsburgh that have really since November and December have come to the forefront. Like, for example, Pittsburgh being the number one most affordable city out of the top 50 largest housing metros in the United States, and being in the top 10 for best markets for first-time home buyers. Not to mention our median list price, and this is great information for you guys out here, again, just to reiterate, the median list price in Pittsburgh for a home is about $245,000, compared to the nation's median list price at about $415,000. So that's a huge swing. And then the annual salary that you would need in Pittsburgh to buy a $245,000 home. Now, this is with a few mortgage assumptions, et cetera. about $65,000 to $68,000 annually versus what you would need in elsewhere, let's say in the country, some of the larger metros, at about $110,000. I mean, that's a huge difference, which again is what makes Pittsburgh so affordable, such a hot market. Your dollar goes farther here. So knowing all of that and having listened to a bunch of the articles that I had just talked about. We've got all eyes on Pittsburgh. And plus, we've got a new mayor, we've got a new administration. There's a ton of stuff happening here. All of that is great. But everyone is talking about these rates, right? As of yesterday, so we're recording right now in January. And as of yesterday, Homes.com, so we're recording on a Friday. Yesterday was Thursday. Homes.com came out and said that the rates came down to about 6.06% as of yesterday. So we're mid-January here. Well, what the hell's going on with rates? Talk to me. Everyone wants to know. They want me to shut up. They want you to talk. Take it away.
Yeah, whenever people they come, to me and they know that I'm a lender, it's always how are the rates? It's not how are you. So no, what's going on with rates is yes, the headline yesterday was I think 6.06. Not a lot of people know this because it was literally for 20 minutes, but 1 week ago today on Friday, it actually dipped down to 5.99.
I saw that. Well, one of the funny things about pre-recording something like this is by the time this airs, maybe next week, some of this data could be irrelevant with regards to rates. So it's very much a
rate.
Right, exactly. So do bear in mind this is a snapshot in time. But I did see those dip a little bit below 6, and I was like, but I knew we were not recording until the following week. So I was like, how relevant is this going to be?
Yes.
But anyways,
yes.
Go ahead.
Yeah. So we'll stay with the 6.06. Basically, since the beginning of 25 to now the beginning of 2026. Rates have come down almost exactly a full 1%.
Wow.
And that has a lot to do with outside factors. So basically, the mortgage interest rate environment is dictated based on the bond market. That bond market is made up of human being bond traders that are influenced by outside factors. Those outside factors are things like, inflation, jobs reports, unemployment, the current administration, the Fed, all of these things that are trending in the right direction for mortgage interest rates. And it's been anything but linear over the last year, but it is a downward trend, and we expect to continue to see that.
Excellent. So you brought up a good point. You touched on it very briefly. When, and this is a common misconception. So I would suggest, those listening, take this into consideration. We always hear that the Fed is cutting rates, and that doesn't parallel all the time with the idea that interest rates will come down. So talk to me a little bit about that, because a lot of people will think, they heard the Fed cut rates by, a quarter of base, whatever the case may be. They automatically assume that the mortgage rates are going to come down. So walk me through that.
Absolutely. Yeah. The federal funds rate is short-term interest rates. Things like home equity lines of credit, credit cards, auto loans, short-term type of loans. Again, like I mentioned before, the mortgage interest rate is dictated based on the bond market and specifically the 10-year Treasury bond. Mm-hmm. So the 10-year Treasury bond, that plus a spread is the average 30-year fixed conventional loan on any given day. Now, that does not directly follow, but it indirectly typically does follow what the federal fund rate is doing, moving up and down.
Great points. I think that it's really just important to remember that just because the Fed is cutting doesn't mean that the rates are going to follow suit, even though that does sometimes happen more often than not. Mm-hmm. When rates are coming down, so let's say we did have 7% recently, or within the last year or so, and now we're coming down to hovering right over 6%. That's going to increase the buyer's purchasing power, which obviously makes sense. But is this a signal in the market that it's time to buy?
It's a good question. I wouldn't necessarily, I would never say that you should buy or not buy based on an interest rate alone.
Great point.
It is truly when you are ready. I've always heard the term buy real estate and wait. Don't wait to buy real estate. So I am an advocate of buying sooner than later, building the equity, getting the appreciation. But at the end of the day, if you're waiting for rates to come down in order to purchase, you know as well as anybody that is going to bring more and more buyers into the market. Going to be harder to get a home that we already have a lack of inventory of. And it's going to, eventually it already has, but it's going to continue to push the price of the home up.
You're waiting for rates to come down, but that doesn't stop the home price appreciation going up. So essentially, and my background is investment, so I look at it, the opportunity cost or time value of money, right? So a dollar today is worth more than a dollar tomorrow. So you might be waiting for the rates to come down, but the homes are going to keep, especially in the Pittsburgh market, are going to keep increasing. So you're essentially almost stepping over dimes to get to nickels, where you can really just move forward with a purchase and potentially refinance, buy down the rate, buy down with points. So I think that there's a lot of things that people can do that they're so hell bent on this tunnel vision of these rates that is really potentially hurting them.
Yeah, I mean, wealth in real estate's not built on an interest rate. It's built on appreciation. So the sooner you can buy in a good market, in a good area, your home will appreciate over time, and you will build wealth that way.
Yeah, I think that's a really good point. I think and I almost want you to say that again. It's wealth is not built on the interest rate. It's built on the appreciation, the value. So think about that. When you're meeting with your financial planners, your lenders, your real estate agents, anyone that's going to help guide you through this process, that's a really kind of a good mantra to really have in the back of your mind when you're meeting with people to see what the next step looks like. Because quite honestly, everyone's real estate journey is different. It's a thumbprint. So there is never. I mean, as an agent, I'm going to say, it's always the best time to buy is yesterday, right? Because the best way to build generational wealth is through real estate, in my opinion. Okay. But it's get out there, meet with the right people. They'll help guide you. But don't get so hung up on the 6 versus 6.06 versus 6.25. Those are maybe tens of dollars, in your monthly payment. So just consider that when you're meeting with people. That's the best. The best advice that I can give is always just getting the right people in your corner. And that's what I appreciate about working with you. The next question that I have, I think, is kind of fun, but what is one thing you think buyers think they know about mortgages, but it's totally wrong?
I would say two things, actually.
Okay.
So to piggyback off of the rate discussion, I would say that rate is the most important piece of the pie. Rate is a piece of the pie. In my opinion, it is far from the most important.
Okay.
I think aligning yourself with the right team, lender, realtor, title, home inspector, the whole 9 yards, to make that process as smooth as possible is the number one goal.
So true.
And structuring that deal to what you need is the most important thing. And that may be a rate, it may not be. But number two, I would say the 20% down. People still think you need 20% down to buy a house, and you literally don't have to have a dime in some cases. 0% down, grants with 1% down, 3% down, 5% down. So yeah.
I think that's a really good point too. I think people forget that there is, I'm going to use the term free money, but there are grants out there that Absolutely. Exist. So, again, talk with your mortgage professional, talk with your real estate professional, financial advisor, accountant. I affectionately call that grouping of people the real estate glam squad. So, you want to look your best, you want to feel your best, you want to buy the best that you can, or sell. That's all of these people are so crucial to the transaction. Yep. And I think you hit the nail on the head with that one. So I keep it, and I don't want to get too in the weeds with this, but there have been article after article about new loan programs that FHFA is considering. Mm-hmm. And there are 3 in particular. Can you maybe give us a high-level view? There's I think a portable mortgage, the 50-year mortgage, and then the crypto-backed mortgage, if I'm not mistaken. So what's going on?
Well, transparently, those were put out in the news, and to my knowledge, not a lot's happened with any of them as far as putting those into motion just yet.
Got it.
But those are the types of things that move that, bond market, the 10-year yield, which then,
Sure.
mortgage interest rates. So I'll start with the first one, the portable mortgage. I think it'd be great. That would free up houses that people are locked into 2, 3, 4%, and they don't want to go into a, now upper 5, lower 6 rate. For them to move and for others to assume that house for their new home.
So essentially, Jordan, that would be, for those listening out there, a portable mortgage would mean if you were in, let's say, you bought during the pandemic and you had a 2% interest rate, essentially you could pick up and move your rate, your mortgage over into the next property, which would be different from an assumable mortgage where you would be then assuming the current seller of the property's remaining mortgage balance, essentially.
Yes.
So I want to make sure that there's a distinction there.
Yes.
Portable mortgage, the opposite of an assumable mortgage.
Yes, good point.
And there are caveats with those as well. Some work for conventional loans, some do not. So just do your research and, but I do just want to put that little caveat out there.
Yeah. The second one, the 50-year mortgage, this one gets a lot of hate. I don't hate it.
Okay.
I'm actually a fan of it, and simply because what we talked about earlier, buying real estate in weight, appreciation, sure. That's what builds wealth. I think there should be some parameters if this gets put into motion. It is a long time to hold a mortgage, but the average mortgage is held for 3 to 7 years. So the likelihood of somebody being even in a 15-year mortgage is not high. So I think 50-year mortgages could be a really good opportunity to serve, first-time home buyers, somebody getting out of rent where they're paying 100% interest,
sure,
into a mortgage and building wealth.
And say that again. I think you're coming in with some great sound bites for me today, and I'm here for it. Rent is what?
100% interest.
100% interest. You're not building anything from that. Yes, you might not have the headaches and of maintenance and all of that, but rent is 100% interest. Just let that sink in. So, anyways, he's giving me gold today.
One-liners.
One line. I love it. All right, so we've got the portable mortgage. We've got the 50-year mortgage. Now, talk to me a little bit about crypto.
Yeah, this one I don't have a whole lot to say much. Okay. I don't know enough about crypto and the securitization. If there's margin calls on that, I'm skeptical. I don't have money in crypto, and I just don't know enough about it. But if it opens doors for home buyers, I'm for it.
Yeah, that's what. Bless, love that. Yeah, I'm not too familiar with that on that side of it, anyways. So certainly it's getting a lot of buzz, but we love buzzwords in real estate, don't we?
We do.
All right, so a couple of more questions for you here. We touched on portable. We touched on assumable mortgages. Talked about best time to buy, which is subjective based on what your real estate journey looks like. I always like to say, especially when I'm with a lender or someone who just kind of understands that side of the industry, is though you might not physically be ready to purchase, the best time to start looking at the market is yesterday, and the idea of figuring out what it is your goal is, what you're projecting to want to save towards, right? You should always be saving. You should always be working towards purchasing a home. Maybe you're not ready to buy a home for another year or two, but you should be thinking about it. That's the best time to really start, is yesterday. Start coming up with a plan. If you are able to afford the services of a financial planner, something like that, certainly well worth the conversation with them. But keeping that in mind, if someone wants to buy in the next 6 to 12 months, what should they start doing today to prepare?
In my opinion, focus solely on credit first.
Okay.
Because there are programs that you don't even need to have a job and source income. So that's the income piece that we don't necessarily need depending on the situation.
Okay.
Assets, we talked about earlier, you don't even need a down payment in some instances.
Sure.
You can even have closing costs covered in other instances. So that's assets. But that, the rate is dictated mainly on your credit score, and you have to qualify. There are always credit score minimums. I would say the number one thing would be credit, cleaning up anything that derogatory, getting that score up as high as you can.
Okay. So would you recommend, and it's going to be case by case basis, but typically people will automatically think pay off an entire credit card. Is that something they should do, should not? They should really, I'm assuming, talk to a professional and talk to a financial planner. But in your mind, or in your experience, that's typically the first thing that people ask me: should I just pay off all of my credit card debt? And it's not the case in every situation.
No, it's not. It depends.
Yeah, it depends. It depends. Yep.
I would say
case by case basis.
You should meet. Here's a plug. Meet with your lender. You need
Give Jordan
to,
a call. Northern Mortgage.
You could do soft pulls. We do soft pulls every single day, and it doesn't affect your credit.
Okay.
There's no hard inquiry, but it gives us all the line items on your credit report. What they are, what type it is, what the outstanding balance is, what the limit is, are there derogatory marks, everything. And we can just tell you and coach you, hey, if you do X, Y, and Z, your score should improve by X amount of points. So you don't necessarily need to put every dime into paying off debt, but there could be really good, there could be a really good opportunity to maximize the amount of increase in your score with minimal effort.
Love that. So, okay, so that's really good advice. So it's kind of taking a little bit of everything, putting it together, and again, letting a professional coach you and guide you through that process. All right, so my next question here is kind of, I would say, pertinent for today, because over the last couple of years, we've seen a strong seller's market. And one of the articles that I touched on talked about Pittsburgh kind of skewing a little bit, and not so much of a buyer's market, but kind of trending a little bit that way, which probably based off of rates. And, but the question that I have is, when a market shifts, what should buyers and sellers do differently from a financing perspective? Is there anything, that would trigger, from a market shift perspective, that would trigger them to do something differently?
Yeah, this would be, in my opinion, being with the right personnel, aligning yourself with the correct realtor and lender team that know this industry, know this market, battle tested, because we've seen the ups, the downs, the swings, buyer's market, seller's market, and we're boots on the ground every single day. So that alone, in my opinion, I don't think that there's one thing in particular. It's getting a game plan to suit your needs.
Getting your team.
Yeah, and getting a game plan to get an offer accepted in whatever that market may be.
I think that's a great point, because that advice is transferable to buyers and sellers, because sellers on the same side, the same side of the coin, they need to put a team together as well.
Absolutely.
Right? And that's great. So this one's kind of fun, and I'm laughing because I have some of my realtor colleagues in the back of my head here. But for any realtors who are listening or watching out there, what is one thing that we as realtors, as the real estate professionals and I'm very much stay in your lane kind of a person, what can we do as a people to make the mortgage side of things and make your life easier?
I would say,
get the hell out of the way. Is that right? Stay in your lane.
To a point.
Okay.
I think yes. There's yes. I want to stay in my lane. I'm not. I certainly can't be a realtor. I couldn't imagine doing that on top of lending. But I would say making sure that the client views us all as a team, and views.
That's such a good point.
Yeah, I would say that instead of being like a secondhand ancillary product, bringing everybody together, being on the same page, because this is the largest investment of their lives usually.
That's not where I thought you were going to go with this. I love that answer, because it is, in my mind, I'm like, communication. Communication is super important, right?
Of course.
But seeing it, I can't, now that you're saying that, there's been so many times where if I've listed a property, maybe the buyer's agent is passing the buck onto the lender, or, and it creates this, it's almost like they're against each other, right? Well, the lender said this, or the appraiser said that, and whatever. I think that's such a great point. I think that collaboration and being a team. Yeah. I did not think you were going to go that way, and that's awesome. Okay. Anyways, continue. Sorry, I just got excited about that.
No, I would say having one team as one goal, and making sure again, that the buyer's needs are met, but depending on the market, structuring that offer to get an accepted offer, whether it's buyer, seller market or whatever the case may be.
Great. Love that. Well, this has been great. I love all of the answers, all the little buzzwords, all the it's been really good. I've got 2 little segments left. Cool. If you're gonna stick around for a little bit.
Let's do it.
All right, cool. So we have a segment that I'm affectionately calling Brew Tilly Honest. All right, thanks. That was like a giant hug. So it's just kind of like rapid fire questions. Don't look at my stuff over here. I don't want you to get to know ahead of time. Okay, good. I don't want you to have it ahead of time here. So favorite coffee shop?
Generosta.
I knew you were going to say that. I don't even know.
We've met there.
Yeah, I was just going to say, well, that's absolutely where we met. Okay. Favorite local business?
I'm partial. I'd say Generosa.
Generosa. I knew you were going to say that too. Okay. Fair enough. If you've not been to Generosa, I'm literally in the screen here. If you've not been to Generosa in Warrendale, it's awesome. And they have the little brewing situation too, right? Like
coffee, beer, wine, spirit, all the above.
Yeah, it's really cool. And it's in the mix of a bunch of great businesses as well. There's some great dining options over that way too. So if you are out in the Warrendale area, be sure to stop by. Maybe we'll have coffee there. Maybe we'll do a little podcast there from Generosa. We'll have you come back and all right, cool. You've got 30 minutes to show off Pittsburgh to someone from out of town. Where are you taking them?
You got to go Mount Washington.
Okay, the Overlook, right?
Absolutely.
Okay, all right. Love that. Dream client you'd love to represent?
Sidney Crosby.
Okay, all right. Hockey's very big right now. Love that. Okay.
Sid's been an idol of mine for 20 years. So
okay.
that would be a dream.
Okay, right on. Pump up song before a client meeting or something. Is there something that gets you going?
I run pretty hot.
Okay.
And I'm pretty amped about what I do. I truly love what I do every day. And that can kind of carry over, rather than me going into a meeting and let's get you into a house.
Yep.
Maybe bring it back a couple notches.
Okay.
I would say something calming.
Something calming. Okay.
Yes.
All right. I'll take that into consideration. I am very in your face 24/7 and overly caffeinated all the time. So I can appreciate needing to like a little like. Are we talking like Enya, or whale noises,
brown noise?
Soothing? Yeah, right. Something soothing, something that's just going to bring you back down to center.
Yes,
love that. All right, and then finally here, I have a segment that I like to call the sweet treat. And if anyone is, that video with I think it's like a German guy or something is like, oh, it's a sweet treat. Do you know what I'm talking about?
I do.
Oh, is it a sweet treat? So imagine me saying that to Jordan right now asking. Okay, well, anyways, so the last segment is called the sweet treat because when you're out and you're having coffee with a friend, of course you're going to get a little sweet treat. So essentially what it is like an uplifting story from your side of the industry. Is there anything that you want to share with us, or is there an experience that you've had that was kind of uplifting? Because there's so much negativity going on in the world right now, and every time you turn on the news, it's a disaster. And, especially people love to talk bad about the real estate market. So it's always the sky is falling. Mm-hmm. Give us something uplifting. And if you have something that we can take with us.
Yeah. This was recent.
Okay.
It closed last month, end of 2025. It was a veteran.
Okay.
He and his wife, they had a growing family. They were living in the South, Alabama, Mississippi area, and looking to move here to Pittsburgh to be closer to family. They had a very limited amount of cash and a very high debt to income ratio. So that doesn't usually bode well, but we were able to make that work, get them in before the holidays, and they brought, I think, about $400 to closing.
No way.
Yeah, we were able to structure the deal where it was zero down as a VA loan.
Yep.
And almost all the closing costs were paid for by the seller.
Wow.
So, and they got here before Christmas.
That's a great example of a little sweet treat, something uplifting, and that's fantastic, and I'm happy that it worked out for them. Veterans put their life on the line for us, so we can do this. Yes. So if anybody is deserving, So, well, thanks for making that happen.
Absolutely.
What's next for Jordan Beck? What's going on?
Well, just started a branch.
Casual, no big deal.
Yeah. I would just say that it's building the right team and the best team possible to, number one, serve at the highest level and cater to referral partners and ultimately our clients that we share.
Sure.
That is literally going to impact and change the towns that we live in, and I want to do that because I love what I do, and that, in my opinion, is the way I can serve my community at the highest level.
Awesome. All right, Jordan. Last question: how can people connect with you? How do they get in touch with you?
I am on Facebook, LinkedIn, and Instagram.
Okay.
Facebook and LinkedIn are just my name, Jordan Beck, and Instagram, my handle, I believe is what it's called, is JCBeck91. But again, type my name in, you'll find it.
Okay.
Yeah.
And once I master editing, I will include his work phone and his email address as well. But you'll be able to find him through. We'll link. I'm sure I'll figure out how to do that. But we'll have links to Northern Mortgage and Jordan and all of that, so you won't have a problem finding him. But Jordan, thank you. I appreciate you coming on. I'm so excited for this year ahead, and you've been great to work with over these last couple of years. So really always appreciate your transparency, your honesty, and appreciate you spending some time with me here today at the podcast and, going on this little venture with me. So excited to have him here, and best of luck to you with the branch, and I know you're gonna crush it.
Thank you. Appreciate you having me on. This was fun.
Anytime. We'll probably be back next time with Jordan at some point this year, maybe hopefully at Generosta in Warrendale. So we'll have to stay tuned for that one. But thanks again. Appreciate having you on.
Likewise.
And that's a wrap on today's brew. Thank you for joining me. I'm your host, Dominic Janitis, and this is Hot Market Cold Brew, the overly caffeinated real estate podcast that's always on the grind. Whether you're house hunting, deal chasing, or just looking for a little real estate tea, I hope today's episode served you up something bold to sip on and take to go. Until next time. Don't forget to like, subscribe, and share this podcast with your favorite real estate hunting friend. And leave a review if you liked what I brewed. Catch you next time. The last question. Where can people find you online? Or find you in general? I mean, not your home address. That's weird. I'm going to stop. Where can people find you?
They can find
me. What? How can people connect with Jordan Beck? Let's ask that question. I will do a lead-in better than that. I was like, what's your social security number?
Yeah, right. What's your daughter's name?
Yeah, what's your daughter's name? Okay. All right, Jordan.